Hey everyone. Have you ever looked at your bank account after a long month of hard work and thought, wait, I make a good salary, so where did it all go? If you feel like you're running on a financial treadmill, moving fast but staying in the same place, you aren't alone. This is the classic middle class trap. We have steady jobs and decent paychecks, but we often fall into subtle habits that keep us from actually becoming wealthy. Today, we're breaking down the 12 most common mistakes the middle class makes with money. By the end of this video, you'll know exactly how to spot these traps and, more importantly, how to climb out of them. Let's dive in. First up is the biggest one, living beyond your means. Think about the last time you got a promotion or a bonus. Did you immediately start looking at a nicer car or a more expensive gym membership? That's the trap. When our income goes up, our spending usually follows it like a shadow. This keeps you in a cycle of living paycheck to paycheck, even if those paychecks are big. Real wealth isn't about what you spend, it's about what you keep. Mistake number 2 is relying on credit cards for daily life. Don't get me wrong, points and miles are great, but when we start using plastic for groceries or gas because the cash isn't there, we're in trouble. With interest rates often hitting 20% or higher, that $5 latte can end up costing you $15 by the time you pay it off. If you can't pay the statement in full every month, the bank is the one getting rich, not you. The what-if gap. No emergency fund. Life happens. Your transmission blows, the roof leaks, or your dog eats something they shouldn't. Most middle-class families don't have a safety net. Without 3 to 6 months of expenses saved up, a single bad day can turn into years of debt. Think of an emergency fund as an anxiety insurance. It's the peace of mind that lets you sleep at night knowing you're covered. Flying blind, ignoring budgeting. I know, the word budget sounds like a diet, no fun and lots of restriction. But ignoring your budget is like trying to drive to a new city without a GPS. You might get there, but you'll waste a lot of gas and time. Budgeting isn't about saying no to fun, it's about giving every dollar a job. When you know exactly where your money's going, you're the boss of your finances, not the other way around. The cost of waiting, failing to invest early. Many of us say, I'll start investing when I have more money. But the truth is, time is more powerful than the amount you invest. This is all about compound interest. A dollar invested in your 20s is worth way more than a dollar invested in your 40s. Even if it's just $50 a month, starting today is better than starting someday. Don't wait for the perfect moment was yesterday. Being house poor. We're told that buying a big house is the ultimate sign of success, but buying too much house can be a financial anchor. If 50% of your take-home pay goes to a mortgage, taxes, and maintenance, you're house poor. You have a beautiful kitchen, but you can't afford to put food in the pantry or save for retirement. Remember, your home is a place to live, but your investments are what set you free. The retirement later mindset. It's easy to overlook retirement when you have kids to feed or a mortgage to pay. But retirement isn't an age, it's a financial number. Relying just on Social Security usually isn't enough to maintain your lifestyle. Whether it's a 401k or an IRA, treat your retirement contribution like a non-negotiable bill you pay to your future self every single month. Putting all your eggs in one basket. Mistake 8 is failing to diversify. We all have that one friend who says, put everything into this one tech stock, or real estate is the only way. But if that one market crashes, your entire net worth goes with it. Spreading your money across different types of investments acts like a shock absorber for your wealth. It keeps you safe when things get bumpy. The danger of the single income. Most of us rely on a single paycheck, but if that job disappears, your income drops to zero instantly. Successful people often look for multiple streams of income. This doesn't mean you need 5 jobs. It could be a side hustle, a rental property, or even dividend-paying stocks. Having a plan B for your income is the ultimate security blanket. Leaving money on the table. Are you using tax-advantaged accounts? If you aren't using things like an HSA or a 401k match, you're essentially giving the government and your employer a tip they didn't ask for. A company match is 100% return on your money immediately. It's the closest thing to free money you'll ever find. Don't walk past it. The lifestyle inflation trap. This is the sibling of living beyond your means. Lifestyle inflation is when your standard of living rises as fast as your income. You get a $5,000 raise and suddenly you need a $5,000 more expensive vacation. The secret to getting ahead? Keep your expenses the same for a few years even when your pay goes up. That gap between what you earn and what you spend is where wealth is built. forgetting healthcare costs. Finally, we often forget to plan for healthcare. As we get older, medical bills become one of our biggest expenses. Not factoring this into your long-term plan can wipe out a lifetime of savings in just a few months. Looking into health savings accounts or proper insurance now can save your future self from a massive financial headache. Conclusion: small steps, big results. I know that's a lot to think about, but here's the good news. You don't have to fix all 12 today. Real financial success comes from making small, simple changes over time. Maybe today you start a budget, or maybe you finally open that retirement account. The middle class has the income to be wealthy. We just have to be intentional with where it goes. Thanks for watching. If you found this helpful, give us a thumbs up and let me know in the comments which of these mistakes have you struggled with the most. Let's talk about it. See you in the next one.